Our next presenter this morning is Auditor General Bonnie Lisk. I would ask that you come forward. Please make yourself comfortable. You've done this many times, so you know the drill. You're going to have 5 minutes to address our committee, and then they are going to each ask you questions. So please begin for Hansard, stating your name, and start anytime.
Good morning. I'm Bonnie Lisk, and I'm the Auditor General of Ontario. Thank you for letting me comment on Bill 132. It is not the job of the Auditor General to comment on government policy. The government's decision to borrow money to lower hydro bills by 25% is a policy decision, and so I have no comment on it. However, when it comes to the accounting for such a decision, it is my responsibility to make sure that it is properly recorded in the consolidated financial statements of the province and is transparently reported to the people of Ontario. And this is why I am here today. The accounting transaction is structured in a complex manner. In simple terms, the government plans to record as an asset the expected recovery of the 25% electricity costs from future ratepayers that it will borrow for and pay to power producers today. In essence, it is setting up as an asset an accounts receivable that it expects to collect from future taxpayers between 2020 ratepayers between 2022 and 2047 that is not yet an accounts receivable because the consumer has not yet used the electricity. A similar move to legislate accounting to defer costs was proposed with the restructuring of the Ontario electricity sector in the late 1990s. At that time, the government did not want the net impact of the stranded debt, which had already been incurred, to be reflected on the province's financial statements. Because it anticipated that ratepayers would pay down this debt, it wanted to create an asset to reflect those future anticipated revenues from electricity ratepayers. This approach would have fully offset the total stranded debt, such that there would have been no net debt impact reflected on the province's consolidated financial statements. The Auditor General's opinion, as stated in our office's 2000 annual report, was that this, I quote, would have set an unacceptable precedent for government accounting. It would also have represented a departure from one of the central tenets of generally accepted accounting principles, that revenue not be recognized until it is earned, end quote. The government heard these concerns and was prudent in making the decision to not create an asset for future anticipated ratepayer payments. I believe those concerns are equally applicable today. The government of today plans to borrow about $26 billion to cover the 25% shortfall from ratepayers, but it does not want to reflect the overall impact of these borrowings on the consolidated statements of the province, which include the electricity sector. It plans to record anticipated revenue as an asset to offset borrowings in its consolidated statements. As a result, there will be no impact on the net debt on the province's balance sheet. As well, this legislation is designed so that there will be no impact on the province's calculation of the annual surplus or deficit. Today, like in 2000, we believe this sets a dangerous precedent. Let me give you an example. Snow plowing in Ontario is performed by private sector contractors who own equipment. The contractors' bills are properly included as a government expense each year. Now, say the government decides that taxpayers are paying too much for snow plowing and points out that there is value in the snow plowing equipment beyond the terms of the contract. It could argue that it expects to negotiate significantly lower rates in future contracts and wants to defer some current snow plowing costs into the future to smooth these costs over time. For obvious reasons, this is not allowed under Canadian public sector accounting standards. As we know, accounting deals with past transactions, not future ones. So to anticipate that private sector electricity generators will reduce their costs in the future and to use legislation to make this potential future benefit an asset is also not allowed under Canadian public sector accounting standards. So what's the bottom line? I would not be doing my job as Auditor General if I said that creating assets through the legislation is acceptable. Under this bill, the government's policy decision to borrow money to subsidize electricity bills will not affect the province's net debt or annual deficit. This legislated accounting is not in accordance with Canadian public sector accounting standards. These standards are there to ensure that the financial reporting of government policy decisions reflects common sense. Borrowings are debt, unearned revenue is not an asset today, and when your expenses exceed your revenues, you incur a deficit. Such common sense and the principle of substance over form should prevail in the financial reporting of government policy decisions. I now welcome any questions you may have. And
Thank
sorry
you, Ms.
for the
Lisk.
speed.
Our first questions for you are from MPP Delaney.
Good morning, Auditor.
morning.
Nice to see you again. The Ontario Energy Board and the Independent Electricity System Operator practice the policy of deferral accounts fairly frequently. Could you comment on that?
With respect to this legislation, the government is legislating the behavior and the activities of the Ontario Energy Board with respect to this transaction. We do not view them independent. The power contracts that were negotiated, that were government policy decisions, are not regulatory assets because they were never fielded before a regulator in Canada.
Okay. In your opinion, would you give me a comment on the practice of spreading the costs of necessary infrastructure investments in general, electricity infrastructure in particular, in a way that more accurately represents the useful lifespan of those assets, given that the lifetime of those assets over the decades has expanded?
So in the case of the contracts that we're talking about, the government does not own the assets. They are owned by third parties. And therefore, the spreading of third-party costs is a very unusual treatment and wouldn't have benefit to electricity ratepayers because they have no assets to generate the power they need to pay for in the future because the government does not own those assets.
Okay. Did your remarks in your presentation this morning accurately describe, in your opinion, what a regulatory asset is?
Under PSAP, Public Sector Accounting Standards, regulatory assets are considered intangibles and cannot be booked on financial statements in Canada. U.S. GAAP might allow it, but U.S. GAAP is not acceptable presentation standards for the government's financial statements.
Okay. Thank you very much.
Thank you very much. Our next questions for you are from MPP Walker.
Good morning. How are
Good
you?
morning. Thank you.
This morning in the Fiscal Accountability Officer's document that he shared with us, he has number 4 is actually titled Accounting Treatment Uncertainty. It says, due to the nature of the proposed financing transaction, the FAO recommends that members of provincial parliament obtain assurance from the Office of the Auditor General of Ontario that the province's proposed accounting treatment for the electricity cost refinancing meets public sector accounting standards and will not impact the province's annual surplus deficit and net debt. Could you just make a quick comment on that, because I have a number of other questions?
Yeah, I would say at this point in time that based on the information that has been presented in the bill and based on some of our own initiated work, the transaction as proposed is legislated accounting and does not meet public sector accounting standards.
Agreed. And I think, you know, some of the comments you made, it sets a dangerous precedent. It's already been looked at to do this one other time. The government of the day actually prevailed and said, you're right, we accept that. So it's interesting that the shell game is back on the docket. I think what you said in the very end of your document, borrowings are debt, unearned revenue is not an asset today, and when your expenses exceed your revenues, you incur a deficit. At the end of the day, what I can't seem to find how the government can think of this is they're borrowing money that is just extending their payment plan and is adding money. The figures this morning went as high as $93 billion. This could cost the taxpayer of Ontario. So I don't care whether you call me a taxpayer, a ratepayer, you call me whatever you want, but at the end of the day, the people of Ontario are going to have to pay this debt back. Is that true?
That is true. The financial statements for the government include the electricity sector. Similar to the transaction for the debt retirement fund, OEFC tracked the difference between the rate regulator and the government, and so that worked well. In that case, the debt was recorded on the province's statement. At the end of the day, what this is a financing transaction. It is the government needing to borrow money to cover the difference between what they're collecting from ratepayers and what they're paying to the power producers. That's pretty much the simplicity of it.
And they're putting it on OPG's books, so it won't show as a net deficit or impact them in a negative consequence on their actual books.
That's correct. All the transactions are designed not to affect net debt on the province's books and not to affect the bottom line annual deficit or surplus of the government.
And if these unearned revenues that they're assuming don't come through, who's on the hook to pay those, regardless of whether they're on OPG's books or they're on the government books?
It would still be the province.
The people of the province of Ontario, is that correct?
Correct.
Because that's where the money comes. The province has no money, it comes from the people.
Correct. I
Yes.
think there are a lot of people investing a lot of time and money to set this up, structure it in such a way that it doesn't affect the bottom line of the
And is it a
province.
fair statement, even if they were to borrow this $26 billion, if they borrowed as a province of Ontario, the rate to actually borrow would be much less than it will be by putting, say, 55% on OPG's books. OPG cannot borrow at the same rate as the province of Ontario?
I believe so, but I'm not the authority
We
on
were
the
told
board.
that it was about a
Thank you very much, Mr. Walker. And our final questions for you today are from Mr. Tabbins.
Thank you, Chair. Ms. Lissick, thank you very much for appearing today. You have said to us then that what's proposed by the government does not accept public sector accounting standards. If a statement was brought to you that did not include these funds, say a statement of income and expense for the province as a whole, if a balance sheet came forward and didn't include this, would you be able to rule that that was an acceptable presentation of the province's liabilities and assets?
If the transaction was put through the government statements like the legislation is proposing, that would put me in a position where I would need to qualify on the government's financial statements.
Well, that's a pretty straightforward response. If this was put on the government's books and we didn't have this shell entity set up under OPG, this borrowing, these expenditures, would they be affecting the annually stated surplus and deficit of the province?
That's correct. Every year, the difference between what's paid to the power generators and what's collected from consumers would hit the bottom line of the government as impact on the deficit or surplus. And as well, there would be the debt on the province's books and the interest from that debt.
And so it would increase the province's total debt. It wouldn't be set aside. The legislation as written seems to be an attempt to move all of this off the books, but that is not something that you would accept as an auditor.
The net debt number is an important number that we think needs to be fairly presented. As well, legislated accounting is a risky thing. Legislated accounting sets the tone for any government to decide what the accounting for a transaction should be, even if it's contrary to public sector accounting standards. And so this is a sensitive issue, not just for my office, but for Auditor General's offices across Canada.
And how would...
This is precedent setting.
I have no doubt that this is precedent setting. I found from the beginning this idea of setting up a shell company under OPG was an extraordinary measure. How would bond rating agencies respond to this misstatement of the province's actual revenue and expenses?
You know, I think at the end of the day, people, if they look at the consolidated financial statements, recognize that the source of money is one person, a person in Ontario, and so whether it's a ratepayer or a taxpayer, it's captured in the statements. You can still keep track of the difference between ratepayers and taxpayers. So I think, you know, I would assume the bond rating agencies are smart enough to understand that at the end of the day, if there was risk, it would be picked up by the province.
So would you urge the government to actually follow standard public sector accounting principles?
We would recommend that the government reconsider